Good turnaround Tuesday, Warriors. How's everyone doing? Hello, Mark, Kman, Sinatra, AJ. So someone at the Fed must have gotten short gold last week. They're sending out Kashkari, sounding hawkish. Not sure they did enough. It's pretty interesting to me because he used to be the doviest dove when the other situation was happening. Now he's transformed from a dove to a hawk. So, what do you think, team, about this guy Kashkari?
Good morning, Dale. Good morning,
Good
everybody.
morning. Hey, how are you,
The
K-Man?
cash and carry,
Oh,
yeah,
that,
cash and
yeah,
carry is flipping around like a weather vane.
yeah. I mean, wasn't he the dovest,
He
the
was,
most dovish?
he was,
And
but you
now he
know,
sounds like the most hawkish.
yeah, he sounds like they're not done. Yeah. I was having the same thought when I saw him talk yesterday. They must have taken profit on dollar shorts and
You're thinking
yeah,
like me. Yeah,
you
yeah.
know.
So, all right, well, let's talk about didn't have a chance to talk to you yesterday, came in, so let me start with you. I'm not sure. Is Ryan here too?
No, he's actually
Okay.
out
Okay. All
for
right.
a little while.
Okay. So why don't we start off with US dollar yen,
Hmm.
which, sold off pretty good. The weekly uh was a reversal week. The only thing that bothered me about this weekly is that it never took out these highs, but do you think the highs that we put in last week can be taken out again?
Okay, I mean, nothing is impossible in the market, right?
Right.
That's the first rule. But it's going to be if we are going up there, I reckon. So yesterday we had this recovery in the dollar. Um, well, it started yesterday and overnight, and then in the European morning we added a leg. It's again, we were talking about it on the flow show. It's again a case of you have two or three, whether it's with an acceleration or not, two or three sessions going in one way, and then you take the
Yeah.
other side. And it's very hard to just rely on one side of
The
a move,
market.
whether it
Yeah.
being dollar or the other currencies. And I think same goes for the yen. I think in the end, people are going to be a little bit cautious. Um, but if US yields start to stabilize here and creep up a little bit, don't forget we have decent amounts of bond issuances this week. I don't see a reason why we would not at least go back above 151 towards that prior high there, maybe 150, 130 or 50 or so, and I don't see a reason why we couldn't do it. Ueda over the past couple of sessions hasn't been too cooperative. That pushes me to say it's still somewhere MOF versus the rest of the world, or the dollar side must decide on doing something. And now we have seen overnight again that the dollar is perhaps not completely dead yet.
No. And I look at yields here, came in. I'm wondering what your read is. I look at how it held the 50 here, and I could like visualize a move back towards 480,
Yeah.
kind of like what happened on the left side of the top. Or if it's really aggressive and it makes new highs, um, it's not going to confirm. So I think either way, either we put in a right shoulder or make marginal new highs. Um, I only can see shorting this thing. Not sure, which level's going to do it, but I don't have. I think there's good reasons to think that that wasn't it for the
Yeah,
pullback in
well,
yields.
that's the thing. I mean, technically speaking, and Still already showed that as well. We could be in the making of this head and shoulder. But bond traders, are they looking at a head and shoulder on a
No,
pattern?
they're
We are, right?
vigilantes, man. They're locked and loaded, ready to sell the bonds because there's no fiscal discipline.
Yeah. or and that's what I've been saying for a while now, but it really needs confirmation, or US data are really going to start
Soften.
to decline and slide lower, and then what we're going to see is that phenomenon of everything which is still parked in the RRP and in the money markets, they are going to come to the bond market and buy those issuances that that the Treasury is coming out with. But
Yeah,
before
because
that
they don't want
really
to give
happens,
up a 5 rate in case rates are dropping. They want to lock it in, right?
yeah, and then you are going to see people coming into into the bond market, and we are going to have
That's an
very
island bottom, by the way, in TLT.
mm,
See how it gapped down here? This is a
yeah.
daily. So that, I mean, that's a pretty big gap, right? And then it
Mm.
traded down here, and then we had the Fed, or before the employment
Yeah.
report. Yeah.
So
So
so what I, yeah. So really now we are going to have to monitor those data and saying like that is probably going to decide the bond potential buyers whether they come in or whether they are still going to ask the Treasury to pay up. And we are ahead of very interesting times. We are gradually coming towards the end of the year as well. If they decide to wait for next year, then we could have that rally in the yields. And you know
you mean
what? I think if we
rally
get
in the
another
bond
rally in the
market?
yields,
Rally in the bond market, you mean? Or
yeah, the
yields
bond
still?
market coming off again,
Oh, okay.
and the yields going higher. If that's the case, if the bond market decides that that the Treasury still has to pay up because of the data are holding up relatively well still, and you know what? I think if we get that yield shooting up again, that may be a bit of a painful one this
Yeah.
time.
I'm kind of thinking that we're getting a little bit of a deflationary impulse in the markets. If that was all the dollar could, do, and we're going to make new highs, even if yields don't, the dollar could make new highs with yields going down because the yields in Europe and
Mm,
UK are falling faster.
yeah.
So no one thinks that, okay, let me just finish my thought. So, and you have gold and silver getting clipped, and silver, it breaks this level. It's pretty important, goes to 2140. And then finally, the bigger part of the equation is we're getting a pretty good breakdown in WTI. So lower gold, higher dollar, lower energy is kind of a logical choice to buy bonds and lock in rates. That's what I think is going to happen. That there will be a bond rally, and but there's people on the other side, smart ones. I just saw something by the Fed guy, and he says it's still dire in the bond market, and this rally won't last. So we'll see. That's what makes the market.
Hey Dale, go. I mean, you got crude on your screen. And good morning, K-Man.
Yeah.
Good
Good
morning,
morning.
Dale.
Morning.
It's a breakdown.
Yeah. Well, this is really critical support. I mean, it's
Yeah.
50% retracement of this entire move. We're at 127% extension, and we've been looking at the 79.19 was like our target for like the last like 2 weeks, and it just
Yeah.
seemed like it forever getting there. But we're there now, and it it's all divergent. There isn't a lot of support, and for a move lower, I've got to think buyers are going to step in pretty soon in the in the crude market here. So
Okay, so yesterday I featured the XLE, which I said with that strong rally we had in S&Ps, I was looking for things that did not participate over the weekend. And, we've knocked at this 84 level. I know a lot of people are real long oil shares. It was a star last year, way outperformed the market. And to me, this looks vulnerable. So,
but
I mean,
I'm so I didn't mean to interrupt. Goolsby from the Fed, he's speaking on CNBC right now, and he said so far the slowdown is what you would want in the direction of more balanced growth and sustainable levels. Don't want to pre-commit ourselves to on rate decisions. The job market is getting into better balance. The economy is weakening. I see global oil demand recovering on track. Stocks are actually recovering on these comments. The reason why I mentioned this, just because he is blabbering right now. Kman, do you make anything out of this this stuff?
He's a dove. He's a dove. So
Yeah,
we're going to hear from all of them, from each side of the spectrum, you know.
Major Fed speak today going on. So yeah,
for the rest of the week.
Yeah. I mean, it's like blabbermouth central. It's like you get past all these events, and then they know they can speak for about a couple of weeks pretty freely until they go into their blackout periods. We got Kashikari was just speaking, obviously. Goolsby. We have Barr, Waller today. Logan a little bit later. It's yeah. So
even if we're in a bull market, I look at the 10-year, and this sure looks like a natural place for it to come back to last October's highs, where we stalled here a little bit. So it's at about 434. That looks heavy to me.
Yeah, I agree on and I agree that level is going to be important. Yeah, very important.
If we get there, and Kashkari can't take us up to 5.4 by the end of the year. So that's all I got, Blake. Just it's possible we just have it would take cooperation for the S&Ps. I know they've come back, like you've said, but they haven't made much progress since that. And I think there's some give back coming into S&Ps here. So I don't think we're going straight to new highs.
Yeah. Well. So just looking at the S&P and price action of the market, we haven't pulled back at all. I mean, this has been a really tight consolidation after a massive squeeze higher. So I'd sure would hate to get in front of the market when it's just consolidating this very aggressive move that we've seen. This is like huge ramp up, and now we're just consolidating here. Where I know you've been thinking you looking for shorts in the markets. Where are you going to try to stake your claim again, Dale?
KRE.
No, I'm just talking about the market in general. Okay.
Oh, you mean
so you want to be short
between
KRE.
here between here and 4,400, looking for a pullback to 4,250.
Yeah, I've got the 618 coming in at 44.15. That's when we were talking last week in the ForexAnalytix community, and I'll tell you why these levels become so great. Situations like this. All right. First and foremost, if you look left, a lot of traders, get pretty lazy and they just look left, barely look left, and they just see some resistance there. They're like, well, I'm going to put my stops right above that resistance. Well, the 618 is just slightly above that at 44.15, and you have resistance at 4,400, right?
That'd be a good spot.
So yeah, you let all the shorts get stopped out above 4,400. And then you look to trade it on the short side just above it, because you want to get all the people that, they get John G'd, they get suckered in to the move, and they're like, "Ooh, I'm gonna buy in the breakout," and then they get stepped on right after that. And that's when you have to be a little bit more like, playing advanced chess strategies versus just, trading momentum strategies. So I love the fact that if we get up to 44.15, just above those highs, I'd like to be on the short side of the market right around there. Kman, what are you thinking? You think this market's got some legs?
Well, for sure, it hasn't given up on anything, and it's still trading as if the yields will come off mildly. Again, we're still in that, call it Goldilocks or whatever you want to name it, scenario on the equity markets. But once the if once or if the data are really going to start to show a slowdown, I'm a bit like you. I'm waiting for to see if we can get in those 44s and see what there is to do there.
Yeah. All
Where
right.
are you
Well,
heading to your silver position, okay, man?
I haven't done it yet. Well, I did for before there on the spike. I was pretty lucky to catch a knife early October, but since then I haven't done really much. I covered that, and I'm very patient. I like the low 22s right now, but that fights a little bit with my view that yields can go back up. So yeah, I
Oh, yeah,
might
that's correct.
start to shyly add down there and then see what happens. But I'm still nowhere near full
That's a
position
nice look.
myself, so nowhere near, really nowhere near. Yeah.
So if you're looking at like gold, so gold just came out of a triangle pattern. So we just broke lower. You can see here's Elliott wave count, and this is what like if you look at just the basic technicals, you came out of a triangle. 1950 is going to be pretty big support here. So maybe gold find some buyers down here. We're only about 7 points away from that. Why can't we trade a little bit lower and start finding some buyers here? The 38% retracements that right here at 1930, just in case it's again you get people chasing it on the short side and you get them John G'd on the downside too. So there's a couple ways to play this, I think, but gold is surprisingly weak, keeping that dollar yen a little bid up, isn't it?
Yeah, but don't forget, gold has been bought like hell over the Middle East events, huh?
Right.
And then with the help of the Chinese and everything, and yet we see the rejection above 2000 again. There's decent levels just above that 2000 in gold.
Yeah.
Yeah, and I don't like to view it as an indicator for all the rest right now, but to me it can correct actually lower unless the Chinese continue to sell US treasuries and buy gold or stuff like that. But
And especially if things, if the market views the Middle East as being contained for now. I mean, that's the big deal. And I don't want to make light of the situation, but the market is really not focused on that. And just like it isn't Ukraine, and it's an unfortunate situation, but that's really, all the market really cares about right now. Is it, is it going to affect me? No, it's not. Then I'm gonna go ahead and move along. It's very insensitive. Market is very insensitive in that respect. So let's talk a little bit about the RBA. You had the RBA. They came out, raised rates. The Aussie, I tried to play it on the long side last night at 60. I think I bought it at 65, and I got stopped out at 50, just as it was coming down to this support. But yeah, they basically raised rates, and it's one and done, isn't it, Kman?
Yeah, that's how the market at least reads it.
Mm-hmm.
I wouldn't call it a dovish meeting, but it's a meeting where they now wonder if they have to continue to raise rates and not by how much. So in that sense, the market has repriced its expectations so pricing out further hikes. It's likely going to take perhaps a little longer because Bullock is a bit more hawkish than low, so it's probably going to take a little longer than other central banks to start cutting again. But I think a lot has to do with positioning there.
Yeah, I mean,
the market was likely expecting her to continue on the hawkish side, giving the green light to be short in stuff like EURUSD and things, which I was. And then,
are you short Aussie now, bro?
Me?
Yeah.
No. I don't think
okay.
it warrants to be short Aussie this meeting at least, and the data weren't either. That's what I said over the flow show, and a lot going to depend on what the dollar wants to do now.
Yeah. It's a weak
More
sister.
than the other currency. We had periods where the dollar is something, is one block, and then the rest of the currencies are weak or strong around it. Yeah. And I think she's thrown the ball back to the dollar now, to the US dollar, and Aussie dollar is going to, yeah, I actually don't know what to think about the Aussie dollar right now.
I think we could see 62 again. I'm
It's
a buyer
possible.
there.
It is very possible, Dale. I still refuse to think the dollar is dead. So it's very possible. But we are on intermediate supports right here, I must say.
Yeah, speaking of the dollar, we had a couple questions about the dollar index. I mean, we're still holding a flag pattern. I mean, any which way you slice it, it's holding up well. I do think, though, it is going to be closely associated with risk at this point. That, you know, you have stocks trying to recover, and as long as they continue to try to recover, it's going to weigh on the dollar. But you know, we ever you know, find some resistance in the S&P up here, and we start rolling back over, maybe back below the 200 DMA, I would not want to be short the dollar index at that point.
What do you think would happen if we took out 4,100?
In the S&P?
Yeah.
If we took out 4,100, oh, the dollar would be trading at, we'd be breaking out. We would be, you know, probably
109.
Yeah, I think you'd have the euro trading below 104. And
it would be at our long talked about level, 102.
Yeah, I think so. And you know, it's interesting as far as the euro goes. I mean, you know, a lot of I have orders out. Well, actually, they just canceled this morning. I had orders trying to sell euro at 108, and
it couldn't even get up there.
No, it's struggling. It really is struggling. But I wouldn't write it off just yet. I mean, you look at
do it.
Yeah, you look at like the cable. I want to just show you guys some you know, currency structure really quick. Like the S&P. I don't know what it's still early in the morning, Dale. I like this sleeping in. I got to sleep in an extra few minutes today, so it's great.
Oh, yeah,
I know it's my 5-month hiatus right now, so I'm gonna enjoy it. Anyway, the sterling just hit the 38% retracement. The euro hit the 38% retracement. You know, the Aussie obviously a little deeper correction because of the RBA. The Kiwis falling in line with the Aussie, but dollar CAD bounces have been pretty shallow. I mean, you know, you remember we came out of a wedge here, so you know, dollar CAD, you know, getting close to 50% retracement. You know, you look around, even the dollar Swiss, yeah, we see a dollar bounce, but you know, how aggressive are these bounces? Not really. So if the stock market does recover and we do, you know, see a new, you know, marginal trend high, which kind of feels like it's going to, again, it's a really tight consolidation here after a very aggressive, what would Grega would call it an impulsive move, or any elitician would call that a very impulsive move. You know, it seems like the next logical move in the S&P is going to be higher. Now, how far do we go? You know, I think we might be capped up here, but if you start looking at technical flag patterns and continuation patterns, we can definitely go higher. So if that happens, it should weigh on the dollar.
Measure almost the new highs.
Yeah, I mean, it would probably get us up to this this big here. Let me just do this. It'll get us back up to triangle resistance, right? Which would be this longer term triangle resistance. You know, I think we'd stop short of new highs of the year if but still seasonally, you know, why couldn't we? It still seems logical. I have a hard time believing it, but it is possible. And you can't, you know, discount. You can't live in a bearish sphere all the time. You know, the markets are positioned. There's just not a lot of people that are everybody's, I don't want to say short risk, but you know, everybody is probably less long than they want to be at this point due to the geopolitical risks that were surrounding the markets, due to the, you know, the move that we've seen on bonds this year. You probably have a lot of
10% pullback, garden variety correction.
Yeah, it's just a little correction, but you had probably people out of the markets because of all of the risks that were surrounding the markets. And like I said, there's probably a lot of people that are less long than they want to be. So, what happens?
Look, anyone who knew how to buy that close Friday before it turned the following week is a genius, because there was nothing technical that said go home long.
No, it actually had it absolutely not. It had everything to do with the series of events that happened last week, starting with the BOJ, and then then the Treasury auction report that then the Fed, then the data that came in weaker than expected, from the ISMs to the non-farm payroll. It was a series of events that created this move. But
shorts got creamed. That was
shorts got creamed, really. And like I said, I think people are less long than they really want to be going into year end if things stay calm. Now, I don't know if the markets are going to continue to play out to the upside, but I think if you're an asset manager and you're going into the end of the year and you're not very long right now, and the market continues higher, you're going to start to get FOMO. Because I forget what Chris Weston calls it FOMO, the fear of massive underperformance, something like that, I think is what his acronym is. But that's the problem, right? Because if you're an asset manager and we go into year end rallying, like we do in a lot of seasonal environments, you're going to have people chasing the market higher because they have to be involved. If they're not involved, they're going to get money pulled.
Yeah, that's FOLA. Fear of losing accounts.
Yeah, there you go. Or whatever. You make up your own acronym. That's right. It all works. All right. So hey, Kman, we got a few minutes before we go into North American, or as you like to call Americas, because it is really all the Americas. We go into the stock market open. Let's call it that. What are you thinking here?
What I really think is that we are going to be trading ranges, and especially on the euro dollar, because if I like to look at differentials, they're stuck. Mm-hmm. And that is my other acronym is FOBS, is fear of being stuck. And I have that a little bit in dollar yen now because I'm managing my my option. No, I think euro dollar, again, I remain still a dollar buyer on dips overall for now. I refuse to be too early to change my view completely, my bias. But then for the rest, I think it's going to be euro dollar has more potential to trade a range, and the rest gravitating around. That is my feeling right now. So the rest is probably going to be a little faster than what euro dollar is doing, and that's basically it. And not to be married with a position right here and now, because as I said at the beginning of the show, I said it looks as if we got 2-3 days of moves and then they are in one. So we're still in that scenario, really.
Yeah, and this, gosh, I looked at this dollar yen, and because I know it was your focus in the ForexAnalytix chat room. These, just so everybody can kind of see, this is like the conversations that we were having this morning just about the dollar yen, and you were mentioning about being around that 50 level, and how and guys, this is just like the conversations that we have inside of our chat room in the mornings, just talking about different charts and setups and what people are looking at. And I'll tell you that dollar yen is holding this. See this channel right here? This is that check rate move right there. When you got the little check rate, and then we bounce back, and we've been following this like nice little channel here, and respected it over the weekend, and here we are back about in the middle of the range. And damn it, Kman, I don't want to be range bound, but I think you might be right here. Mm-hmm. As much as I don't want you to be right, I think you are right.
Fear of being stuck.
Yes, fear of being stuck. Mother, son of a gun. All right. Well, as far as the S&P goes, watch the S&P, because like I said, we are consolidating gains, and this is a week that we don't have a whole lot going on this week as far as data goes, just a lot of Fed speak. So you can see, like, you know, Goolsbee, for example, was jacking around the markets this morning here on his comments. But one of the other things I do, go ahead.
I think, sorry, I think Lagarde is up tomorrow and Powell on Thursday.
Thursday, yeah.
On an FT stuff, no? Or what is it?
Well, I think Lagarde is at an FT thing.
FT
Let me just say that again. She is at the Financial Times Global Boardroom in London that's on Friday. And on Thursday, Powell is discussing in a panel in DC challenges, the monetary challenges in a global economy. Jacques Pollock annual research conference in Washington DC is supposed to have questions, and then he's speaking the day before at which this one shouldn't have any monetary policy statements. He's speaking or delivering opening remarks at the Division of Research and Statistics Centennial Conference in Washington DC. Right. Oh man, that will be a sleeper. Holy cow. Anyway, but
what a rock concert.
Woohoo, man. What a party. Anyway, but we have so many Fed speakers today, and there's going to be actually throughout the course of the week. You just look at
why don't they talk about their trades at these press conferences?
There you go. Maybe that's
Kashkari made his one clear.
Yeah, he was short gold.
Kashkari made his trade clear. So now let's see if the others can do stuff.
We have so much faith in all our institutions, don't we?
Well,
and they've given us great reason to, be skeptical.
Yeah.
You know, guys, I just want to say, thank you, Kman, for being here. We have Adam Button here from Forex Live. So obviously we're going to talk a little bit more in currencies. Dale will be discussing with Adam. So make sure you all stick around. It's nice to have Adam here from Forex Live, get his views on what he's seeing in the market. So, but Kman, thanks for being here this morning, and Dale, thanks for guiding us as always. And I'll pass it over to you so you can take it from here.
Thanks, Blake. Thanks, Kay.
Thanks, Coach.
Good session, guys. Like usual, get used to winning, right? Anyway, how are you, Adam? It's great to have you back here.
I'm good. I can't get my video started, but
Blake is still around so Adam could.
Yeah, let me see if I can.
Cannot start your video because the host has stopped it. Sorry.
Yeah, I don't. They only give me one bullet.
Like they only give you one bullet.
Like Andy Griffith gave Barney.
Adam, I'm trying to do whatever I can do, but let me see. Ask to start video. How about this? Did this work?
There we are. I think that's about to work.
Let's see
if it's worth it. There we go.
Yes, it worked. All right.
Adam,
I have bad head, so I'm not going to appear. Talk to you guys later.
You're the best looking 60-year-old guy I've ever seen.
Well, I'm aging 2 days by the day. This week,
anyway,
not so bad. Last week,
I bet if you showed me a high school picture, it wouldn't be that much different. Anyway, so you're lucky. Blessed and
but staying indoors. Staying indoors and avoiding manual labor, I think.
Last time we talked, you were pretty bullish USD CAD, and we had that little pullback in USD CAD.
I've been a buy this week.
Was that an entry for you?
It was. I woke up actually yesterday morning around this time, and yields were up, I don't know, 10 basis points. Dollar CAD wasn't doing too much, maybe like 20 pips off the lows. And I've been kind of just caught that little wave. I caught the first wave up above, I think it was a 1-year high. Earlier, maybe not much.
You're looking for maybe 141, 143, or
I think we get all the way to 145. I'm not really in a rush to get there. I think that's the trade in the US dollar for the next bid. I mean, we're seeing right now, overnight we had a lot of data from Germany. It was poor. Right. Canada cannot hold up in high rates. Germany can't hold up with high rates. Australia is still hiking, and you can see what the market thinks about that. US can hang in there with high rates, and I'm not arguing that the US is going to boom, but it can do a lot better than Canada, Australia, Germany, and probably the UK.
Okay.
Well, Japan, we'll
Yeah, I
see where
mean,
they are.
I pulled up a monthly just for the heck of it, for the hell of it, and
Well, you can see, right?
double top up there.
Yeah, it was a heck of a double top when it happened in the
You
pandemic,
know
but
what?
I mean, it was a short-lived double top because the
You
pandemic
know what
was
it
so
looks
big.
like? Looks like gold. Though gold's had three, but kind of a similar pattern up
Well,
there.
maybe
Maybe we're
we'll
going
get
to
that
get a
third one.
triple top. Yeah,
I mean,
yeah.
housing is turning over here.
What
The
are
Bank of
people doing?
Canada,
Are people
the,
walking away yet, Adam, from their mortgages?
it's a still really brutal situation here. In America, you can give the keys back and you can get out of your mortgage. They get the house. In Canada, it's full recourse, so they can go after everything you have if you signed on for a mortgage. So,
Wow.
that it ultimately helped the US that you could kind of walk away and start over again. In Canada, I mean, you're in rags at the end of it. So, the economic recovery from that, if it were to, I mean, I don't think it can get to that level, but it's certainly brutal if you end up defaulting on a mortgage.
Yeah, yeah. Even more brutal than blowing up a spec account,
Well,
right?
nothing worse than that, Dale.
And so okay, so Canada, it's really the real estate. Consumer spending has to be dropping off then up there.
Well, that's it. Restaurants you're starting to see. You see like the big retailers here have warned for a little while now that it's slowing down. It's not so clear yet in the data, but I think, if we look at the next sort of 6 months of trading, it's trading on economic data and who performs great and who doesn't. And today the dollar's strong, and I think a lot of, some of that at least is on the euro side because the data there was weak. And that's just going to be the day-to-day trade, which I love. I mean, I just love trading economic data, and it's going to last now, I think, for some time. And there's an ebb and flow to it, obviously. I mean, nothing's going to happen in a straight line. And I think you need to have some kind of conviction about who are the winners and losers in this sort of rate environment. And then it will
Yeah,
come down to, the wisdom of central bankers, which is in short supply
yeah.
to
So
guide us through this.
yeah, Kashkari's out there talking like a hawk. But we had a pretty major move in yields last week, Adam. 10-year peaked up there at 5%, and we pulled back, pretty dramatically. Here's the 10-year.
Yeah,
And you know
so I
what?
think.
Even with a strong dollar, it's not up today. To me, do you think you can make the case for selling rallies and buying notes and bonds? Hasn't it turned into the most hated asset class? It's taking banks down. People have lost 50-60% of their principal in bonds.
In the long end, yeah.
There's nothing but bearish news about supply, and no one's buying them anymore. I can't remember a market that would give you more reasons not to buy than the bonds right now.
Well, I think, first of all, it's the biggest bubble in history. And if banks had to realize the market-to-market losses, I mean, this would be something akin to the financial crisis right now.
I heard they finally hedged, and you know what would be the worst thing to happen for them now? They locked in all those losses down there, and they're hedged. Would be
Right.
a bond market rally. Everyone would think it would be improving their balance sheets, and now that they're hedged, it won't be.
Well, it's like everybody hedges at the worst possible time. Isn't that
Yeah,
the tale as old as time? I mean, when they finally put the hedges on, it all falls apart. I mean, I think like the oil companies that were hedging at like $50 2 years
yeah,
ago.
right.
And have just been getting killed since then. And like I think it revealed a couple things though. This big rally last week in bonds, the fall in yields, and there was a lot of money on the sidelines. I think 5% is pretty attractive, Dale, and so there are people that want that, but nobody wanted to kind of catch the falling knife, and then it turned. And what I'm thinking about right now is how much of that was derivative driven, how much of it was positioning driven. We saw there were heavy shorts in a lot of bond proxies. So was that a squeeze? I mean, you assume you have to have real money there. We do get an auction this week. Correct me if I'm wrong. We get 3s, 10s, and 7s maybe this week. And so that'll be we'll see where real money is. And then I kind of think we carve out a range here, 4.5 to 475 in tens. We're at 462 today. And I want to see how much real money demand seems to come back at 475, because the people who think maybe they missed that will come back, or 480 maybe, if you look at that chart, that old break.
Yeah, like a right shoulder potential, failing rally and not make new highs.
Yeah, if real money kind of comes in there again and keeps the lid on it, then we can do pretty well, at least into year end. So there's, and that I think is the trade for right now. It's just, but we'll let this. I mean, the data calendar today, this week is dismal, right? A few Fed speakers moving things around, but I mean, trade balance just now a little bit soft in the U.S. That I don't know if the market's going to trade off that.
Right. Maybe the bonds will finally trade off of like crude is breaking down, although I've been told we're at major support. I look at the XLE, and I know you're an energy trader, Adam, but I look at the XLE, and to me, it looks pretty vulnerable. It was the star of the show last year.
It's been the star this year too. It really has. I think it's the best performing sector, other than like the Magnificent Seven, anyway.
Yeah. Well, here's your daily. We've been knocking at the door of support a few times. That's weakening the shelf.
Yeah, there isn't a lot for the bulls to point to right now. I mean, Saudi Arabia extended the cut yesterday. Not a big surprise, but you didn't get much out of that. And like this SPR refill is the kind of bulls are thinking that the SPR refill is 79 kind of level-ish. And that may, but I don't know how aggressive the US wants to come in there. Seasonally, I will say first week of December is the low. There's a seasonal low kind of early December, and maybe that is the spot, because there's a pretty nice seasonal trend in December, through December, January, and then into February. So that I don't think there's a big rush to buy oil, because I see two time spreads are narrowing, crack spreads and refining. Not a big rush, I would say, to buy oil, but a lot of those oil companies are still very cheap.
Well, it looks like Nat Gas, after putting in a real nice rally from round 2, is in a pullback stage. I would kind of be looking at this too. I like the structure of this, maybe buying a pullback towards 290 in Nat Gas for the winter, winter spec. Everyone says we have plenty, but you never know. Pipeline could have distribution problems. I know what I paid for nat gas last year, and it was
that's so much of it's in the delivery.
It was because of hedge. It was bad hedges here in California that made us pay.
How much natural gas do you need in California?
For heating.
Cooking there? For heating? Open the windows. What do you mean heating?
Oh,
it's cold there?
Yeah.
You guys like it warm?
I mean, compared to you'd be out in your bathing suit, but I'm cold at 50. Okay, so
use your full yearly allotment one day in January.
Yeah, so you like nat gas?
I think it's such a weather trade. The trade I like in natural gas is you buy kind of August and you sell the first cold day in New York, and we had that really last week. It got nice and cold there. Maybe it gets cold again. The forecasts right now are looking pretty warm for November and December, so I think that's the latest kick this week. Are some really nice warm forecasts. El Nino is supposed to be warm. I like, a dip down there. Production should be coming down. The problem is the US is just pumping so hard. The rigs are coming off. Associated gas is a bit of a problem because the oil in Permian is still going pretty hot. But it's a weather trade. It's a weather trade. And
all right. Well,
I'm not a weatherman.
I know you also have some seasonals coming up where you like to buy gold. I think early December, if my memory serves me.
That's the one.
Kind of the time.
That's probably the best single seasonal trade that I know of, is gold in December, or really a dip in November. And I had this drop to 1800, and that was kind of the dip that I'd be looking for. And it was too early, and I was kind of just hemming and hawing on that drop, thinking, because it's still seasonally weak. And then obviously the Middle East happens. Maybe we can get back down to 1900 here in December, and I struggle to see that return to 1810 or whatever it got to. But I'd scale in at 19. But you know, probably need some dollar strength. Again, I don't know if it gets there either. I hate to miss it because it's such a good trade.
Yeah.
Uh,
Okay. Well, we'll be
and
looking
you know,
for it.
China's buying, you know, the sovereigns are there. I mean, a lot is lined up for gold. We're at the peak of the rate hiking cycle everywhere, as far as I'm concerned. That's a huge tailwind for gold.
Do you have a view on silver compared to gold? It's
Well,
kind of been acting, I mean,
I'm like a werewolf, Dale. Stay away from silver.
do you? Okay.
Yeah.
All right. Well,
I
I
mean,
eat
listen,
garlic. I eat
you know,
garlic.
a lot of the EV trades, I think that's kind of one of the, you know, if say it's a three-legged still, you have monetary side, you have a bit of industrial demand, and then the EV side or the green energy side, the silver was really supposed to put it over the top. But a lot of those trades are getting questioned right now.
Yeah.
So,
I know
you
they were
know,
killing solar stocks last week.
solar, lithium, I mean,
Yeah.
anything kind of EV related or green transition related, all the utilities in that have just been blown out. So I don't know about the timing in that, but no strong feelings in.
Okay. I think we've covered quite a lot of ground. Any feeling about yen? You know, we have this big double top up here. This too would play into a bond scenario, depending upon what your view is. But you know, we got all the way back to last October's high.
I think I mean, everyone out there should realize what the Bank of Japan is doing here. And we had it before last week. I mean, a week and a half ago. This is twice now the Bank of Japan has done this. So they come out and they ease their easing, or they kind of hike the band or remove the band. But before that, for 3 or 4 days before the decision, they leaked that they were going to do something very hawkish. They leaked it to Nikkei, they leaked it to Reuters before, and then they did something less hawkish than that, right? So you make a plan, you leak something very hawkish, you do something less hawkish. So you get the market scared, and then you come back. And it was pretty well executed, because you know the bonds or the currency could have gotten blown out on those moves. But
Yeah, you had this.
That was the fear, right? They started leaking, and it was 2 or 3 leaks, and they were credible news organizations. And this is the second time they've done it. Now, I don't know if they can do that again. And now it's out there that they want to get out of this extraordinary monetary policy by the spring. So maybe they can just, you know, every central banker wants to move incrementally. The market doesn't always let you do that, right? Like the Fed would have liked to have been hiking by 25 basis points to control inflation. Instead, they were hiking by 75, because that's the nature of things. So I wonder if they're getting a little cute here, and we'll see if that playbook works again, or if they come up with something else. But usually you can, somewhere like Nikkei or Reuters, you can trust a leak, but they're playing games. I mean, those guys aren't making up stories. So that came from the Bank of Japan.
They're playing they're playing with the market participants and using their liquidity. Are they in the market or just jawboning?
Yeah, I think, I don't know if that had to have been in for intervention back at the start of this chart, or the last, or whatever, that last time the bottom fell out there. I just don't understand what's going on. I mean, those are the leaks. The one at the right hand of that side of that chart, the left hand side, is the one they denied that was ever intervention. It wasn't in the numbers either, which it just doesn't make any sense to me. So
maybe it's a good, you know what, after talking to you about the yen, maybe it's a good time not to trade yen.
Yeah, if anything, though, I am bullish. I mean, you still have wide spreads. But yeah, I think there are, like, if you look at Aussie, CAD, Euro, I mean, if I want to be long dollar, it's not the first place I want to be, but
would it be
looks like that market's going to go up. I mean, if you look at that chart, it's going back to 150, 150, and there will be
we're gonna test these levels again.
100%.
Okay, then we blow through that double top, and that could set the stage for a high if we get through there.
And then if they do intervene again, look at every time it drops, you buy that dip, right? I mean, so sometimes you're better just not to be in it, and let them do their thing. And now it's coast is clear, and and buy the dip. So
talking to you like clarified a trade just for me. Okay, because I was like, I don't know, is this going to be a failing rally? But if the narrative you just brought up, we blow through new highs, and while that's happening, the 10-year is not making new highs in yields, right? They're not. And the bonds aren't making new lows. That's going to be a pretty good signal. So, yen blows off to new highs, but all we do is get back to 480 in the 10-year.
Well, that could, yeah. And also, I mean, stocks are seasonally pretty positive, right? So should help that trade as well.
That was one of the sharpest bear market rallies I've witnessed, and I can't remember how long.
I remember even through the Fed, we had a chat room, we were talking about people were looking for some kind of dip to get on, to get long on Wednesday, and it just never. It just never.
And this was Friday's close.
Yeah. Wow.
So anyone that was smart enough, there were a couple guys in our room said they saw it and it was based upon sentiment. So it had to be based upon sentiment because, well, there was a little divergence, but there was nothing great technically. You had to think it broke down under 4,200 and there's a move to the downside coming.
Yeah, a lot of ugly charts out there still. And yeah, one way, and even now, it like holding here is pretty bullish.
Not giving anything back.
You would expect some kind of dip, some sort of retreat, especially with yields up. I mean, they're a bit down today, but they were up 10 basis points yesterday, and no sign.
Yeah, the stronger dollar. Is the U.S. going to be able to keep their government open? Isn't it this Friday they have to come up with something?
Man, politics is scary out there right now. A lot. I mean, Trump he was testifying yesterday in court, fighting with a judge. Republicans be fighting amongst themselves here to fund the government. I thought it was second week in November. So.
Okay, maybe it is. Yeah. All right.
I mean, they probably got to get it done before then. So it's tempting to tune out of politics. Because these shutdowns, they don't really move things till you're a couple weeks in. Even the last one, as messy as it was, didn't hurt things too badly. So I'd be not so inclined to worry too much about that.
Okay, well then let's talk about something I think that we both could agree is a tragedy, and that's the war between Israel and Hamas. And we have all that hardware there, Adam, massive naval armadas. Do you think that Hezbollah is going to open up another front, which would change the whole picture?
I mean, the market was pretty sharp. If you watch that speech on Friday, it was the leader of Hezbollah speaking for the first time, and he salted in a lot of the usual rhetoric in there. Yeah. But then he also really gave away the strategy, and it was, well, we're just trying to draw some Israeli soldiers away from Gaza. And that was sort of the leaks ahead of it, and that's all it's been so far. I think if it was going to happen, it would happen. The US seems to really be trying to avoid that. And so I think it's kind of the market has moved on. I mean, the world hasn't, that's for sure. And
all right. Well, why don't we wrap it with a country that you pay attention to? There's going to be a summit between Xi and Biden coming up. I think it's being set up. What do you think is going to happen there? And, over the weekend, I kind of wanted to see what did not participate as well with last week's recovery. And really, China did not do much. I'm just looking for the F.A.C.E. It didn't have the same magnitude rally that like the S&Ps had.
Well, that's been the story all year.
There's the F.A.C.E.
So there, I get people sending me stuff all the time about China, and the what do you call it, the politics within China, the palace intrigue of the fighting within China. I mean, this death, the guy, what was he, 58 years old or 60 something? I mean, there's a little bit of smoke there. I came into the year pretty bullish China, and it had a good January, and it's just been a dog of a trade since then. Because they were coming out of COVID and the stimulus should be coming. They don't have a problem with inflation at all in China.
Yeah,
But
they have
they're,
a
they're
problem with
trying to
deflation.
deflate this property bubble, and no one wants to invest there because of potential war and sanctions. And they are, it seems the US and China are trying to thaw things, but how could you really thaw things when you're blocking all these chips, right?
Yeah,
And
good point.
what's going to happen with autos? China's clearly coming for autos, and that's pretty much existential for Germany. And it looks like they're going to lose now on EVs. And next is BYD building a factory in probably Mexico or United States if they can, and trying to sell cheap electric cars. So and again, that's so political, autos. And so I don't, maybe, but it is an economic summit. I find it very difficult to make heads or tails out of China. It's extremely cheap, though. A lot of these companies, fast growing, Baba, BYD, Chinese tech.
Yeah, here's
Baba. They're pretty impressive companies. It's up, that's an okay move from the low, but yeah, you see the trend. It's
that's what I mean.
It's poor.
So we'll see.
But
there's
at some point there has to be a China trade, but
after we take out after they take out the lows, the May lows, maybe. All right, so China, the Middle East, crude looks, you have that seasonal trade coming up, and the big takeaway is look for entries late November, December, early December for gold on this pullback.
Gold and oil, I think you'll do well through year end. Next year's about cuts, right? The next big trade is rate cuts, and that's who's going to have the pain until then. And I think you're going to do pretty well in dollar longs, still for a while yet. Now you have a bit of an opportunity to get in, given the drop.
I have been talking about 109 in the Dixie for a while. That would be 61.8 back and about a 102 euro. Is that a range that rings a bell to you at all? 102.
I'm pretty bearish on the euro, and that's fine.
Under parity.
I believe so. These numbers are gonna. Right now it's pretty complacent on the gas front. Again, weather is the weather, but that's definitely a downside risk. Just the data it's just poor. It's all poor. Sentiment is poor. The ECB is stubborn. I maybe think about getting long the euro, maybe 100 basis points into an ECB cutting cycle at the earliest.
Okay.
So it's either neutral or negative.
Yeah, you wait for them to ring the bell. You don't buy it before they do.
Oh, why? Why would I invest in Europe right now?
Yeah.
And in real money or trading. So
or
even the stock market, like it couldn't rally, it hasn't done much.
The DAX way underperformed. Yeah, European bourses performed much worse than the 10% we had here. So pull back. Great interview, buddy.
Well, always nice talking with you, Dale.
Way to start my day. And the yen, the commentary on the yen, I'll be looking for that. See what happens where yields are at. I
think there's going to be some legs in that dollar CAD trade as well. It's really rolling over here. So,
and I think one thing people don't talk about, if people do begin to embrace the bond market because they got used to getting high yields and their money markets accounts are just going to drop with yields, and they start to embrace it, that would mean a reallocation of a portfolio mix. I'm sure it's not, with this bear market, it's not 70-30 anymore. People have probably reduced it to 10. And if they start to move back to bonds, that means there's going to be some selling in stocks. It could cause a liquidity problem that the bonds could suck up a lot of that liquidity that's been trading around in other instruments and risk.
Yeah, there's a lot of highly indebted kind of companies there that have just been blown out. Anything utilities, a lot of that sort of stuff. The yields in those are really attractive. REITs, but that's a whole different conversation.
So maybe the Fed is going to be successful in saving the bond market, but it might be at the expense of the stock market for a while.
Well, certainly they're going to kick and scream. Stocks will kick and scream next year as the economy gets worse and the Fed doesn't signal a cut. So, we've seen the Fed now for 2 years saying we're going to stay higher for longer. And I believe them until, they will crack
Until you
at some point.
can't.
Well, I mean, it's just going to take
Trust-
some kicking and screaming. The market's saying, hey, like, cut already. And Powell's saying we have to make sure inflation gets to 2. And a lot of central bankers are going to do that. And they'll be paying, and we'll be there to pick up the pieces because they will cut.
Yeah.
But
My trading warrior brother, Adam Button, everybody. Tune in to
Thanks,
Adam on Forex Live.
Yes.
He's a great journalist. His writing, that's his background.
And
loves
I will be in
journalism.
London at the Finance Magnets London Summit. For any of you traders in London, you can sign up for that. So
when is
I'll
that?
be at the 21st-ish, around 1st, 2nd, 3rd of November. So
Okay.
yeah,
Wow.
it'll be a fun trip
Okay.
over to London, and we'll see how
The
I'll be
loonies
my
doing
pub,
well.
my pub indicator there. We'll see how busy they are.
Okay. Well, I work with a couple of guys that know the pub indicator over there.
They know that's
Ryan.
it's well researched over there.
Yeah,
Very well
yeah.
researched. A lot of on the ground.
Ryan. Yeah. Anyway, I hope you have a great time there, Adam, and a safe, successful trip and a safe journey home to your family.
Right on, Dale.
All right, buddy.
Thanks for having me.
Thanks so much. Adam Button, everyone. Follow him at FX_Button and at Forex Live. Important to know what he's thinking. He just proved it again today. So
Thanks.
don't just count your pips, count your blessings. Adios, everyone. Thank you again, Adam.
Cheers,
See
everyone.
ya. You're welcome, Alexander, Ingmar, all you guys. Adios. See you tomorrow. You're welcome, Laura. Patrick, I've answered your message, Patrick. I think I forgot to put a phone number on there. Okay. Send it again.